Calgary condo prices are down almost 9% from a year ago, and sales are down 26%. There's 5 months of supply sitting on the market. So if you stopped watching right now, you'd think that this market is absolutely falling apart. But I've pulled the last 5 years of data, chart by chart, and there's one number buried in there that tells a completely different story. And that is that the benchmark price hasn't moved in 6 months. Not up, not down. It has been completely flat. So today, I'm going to walk you through exactly what's happening in the Calgary condo market, why it's happening, and what I'd be doing right now, whether you own a condo there or you're thinking about buying one. So let's get into it. So quick context if you're new here. I'm a real estate broker and I own multiple condos in Calgary myself. And every month when the Calgary Real Estate Board drops their stats, I break down what the numbers actually mean instead of just reading you the headlines. So CREB just released the June numbers, and the headline on their own press result says it all. And I quote, "High density supply impacts condo prices." Translation, there's just too many condos for sale. 423 condos sold in June. Year to date, sales are down 26%. That is the steepest decline of any property type in Calgary. Meanwhile, 931 new listings came on the market. So for every 10 sellers who listed, only about 4.5 buyers showed up. That's a 45% sales to new listing ratio, and anything under 60% is a buyer's market territory. The benchmark price is $299,000. That's down almost 9% year over year. Now, compare that to detached houses. Detached is only down about 1%. Some districts are actually hitting record highs. So this is not Calgary real estate is crashing. This is one segment that's being affected, and that's condos. And really, it's absorbing a supply wave all by itself. And I'll show you exactly where that wave came from in just a minute. But here's where it gets interesting, because I don't look at just 1 month. I overlay every year since 2021. And when you do that, 3 things jump out that the press releases don't tell you. Number 1, demand. It looks like 2021. So look at these sales charts. In June of 2023, 24, and 25, we were selling somewhere between 850 and 900 condos a month. This June, 423. Demand has been cut in half from the peak. The 2026 line is tracking almost exactly on top of where 2021 was, which, if you remember, was the tail end of the last downturn right before the last big run-up. But notice, sales have gone up almost every single month this year. Demand is building. It's just building from a very low base. And number 2, sellers haven't gotten the memo. Look at the new listings. 931 in June, that's basically the same as it was in 2024 and 2025, when this was a red-hot market. So you've got supply behaving like it's still a seller's market, and demand behaving like it's 2021. That mismatch is the entire story here. That's why inventory is sitting at 2,066 units, and months of supply has been pinned between 4.5 and 5 all year long. And here's the detail that almost nobody catches. Look where each year starts. In 2024, we opened January with about 700 condos on the market. This year, we had 1,435. That's double. The market never cleared over the winter, and we've been dragging that overhang of inventory all year long. And number 3, and this is the big one, the prices have stopped falling. In January, 301, February, 299, March, 300, April, 301, May, 300, June, 299. That is almost a perfectly flat line over the last 6 months. That 9% decline you saw in the headlines, that damage happened through 2025. On a month-to-month basis, 2026 has gone completely sideways. The steep part of this correction, I think, is now behind us. And one more thing, days on market, it's actually improving. 65 days in January, down to 49 in June. Properties that are priced correctly are absolutely selling in a reasonable time frame. The pain in this market is showing up in price, not in listings sitting forever. That's what a functioning correction looks like. This is not a frozen market. Okay, so why is this happening? Well, 2 forces really collided. Force number 1, a construction tsunami. The city of Calgary has over 22,000 housing units under construction right now. 71% of them, nearly 16,000 units, are condos. Years of record housing starts are finishing all at once, and they're landing on both the resale market and the rental market simultaneously. And force number 2, The demand that justified all of this construction, it has cooled. In 2023 and 24, Calgary added 88,000 people. That's what triggered the building boom. This year, the estimate is for 34,000. It's still healthy growth, still one of the fastest growing cities in the country. But the units were built for 88,000 a year growth, and they're being delivered into 34,000 a year growth. And if you're an investor, this hits you twice because the rental market is telling the same story. Vacancy went from 1.4% in 2023, which is basically zero, to 4.6% last year. This is the biggest jump of any major city in Canada. And CMHC projects it's going to peak around 6% next year. So asking rents on apartment condos are down, somewhere between 4 and 8%. And the vacancy is concentrated in the newer buildings built after 2022. And this product is exactly what most investors own. So yes, softer resale prices and softer rents at the same time. This is a tough stretch for any investors out there right now. But here's the setup for what comes next. And this is the part I think that most people are missing. That construction pipeline, it's emptying and nothing is coming in behind it. CMHC's own outlook says condo construction is going to slow more than any other type of housing in Calgary because developers can't get pre-sales. No pre-sales, no financing, no new projects. The supply hitting the market right now was decided 2-3 years ago. It's baked in, but the tap behind it is closing because no major developer in Calgary has successfully launched a new condo project since 2024. So play this forward. You've got a benchmark price that's already flattened out. Demand is recovering month by month. Population still growing by tens of thousands of people a year. The best rent to income ratio of any major city in Canada, and a construction pipeline that's about to go quiet for 2 years. Markets like this often overshoot on the way down, and then they tighten faster than anyone expects when those completions dry up. We watched this exact move happen in 2021. The charts looked almost identical to today. And the people who bought into that pessimism did extremely well over the following 3 and 4 years. Now, I am not promising a repeat. Nobody knows what's going to happen, but I am saying that the ingredients are on the table for recovery. So let's make this practical. If you own a condo and you need to sell it in the next 6 to 12 months, price it to the market, not to your memories. With 5 months of supply, overpricing doesn't get you more money. It gets you more days on market and a bigger price cut later. The data shows correctly priced units are moving in under 50 days. Be one of those. I personally won't even take on a new listing unless the seller is realistic on the price. Otherwise, it's just a complete waste of everyone's time because I know that unit is not going to sell and it's just going to sit on the market. Now, if you own and you don't need to sell, that flat benchmark, that is your friend. Because the free fall of prices is over. If your financing works and your unit is rented, riding out the inventory overhang while the pipeline empties, it's a very defensible play. Rent the unit for another year and just sit back and wait. That is what I'm doing. Now, if you're a buyer or an investor looking to buy a unit, you're being handed leverage right now that has not existed over the last 4 years. You have a sub $300,000 price benchmark, 5 months of supply on the market, and sellers are competing for you. But, and why this matters, you have to do your cash flow analysis on today's rents, not the 2023 rents or what people have forecasted years ago. Vacancy is still drifting up through the next year. The deal has to cash flow in this rental market, not the one that we had before. So that means district level and even building level homework and analysis. Don't use city averages. The spread between a good buy and a bad buy in this market is really enormous. So Calgary condos are down 9% on the year, but flat for the last 6 straight months. Supply is heavy, but the pipeline behind it is thinning. Demand is soft, but recovering every single month. That combination, the falling knife has stopped. Recovery, not yet priced in. This doesn't come around often, and it doesn't last. So if you want the full breakdown, the blog post with every chart is linked below. And if you want to talk about what this means for your specific unit, your district, or even a purchase that you're considering, my calendar link is also down below too. That conversation costs you nothing. It's free, and it might save you a very expensive mistake. So that's it for this video. If you found it useful, then please like and subscribe. I do this every month when the new stats drop, so you're always going to know what's actually happening in the Calgary market, not just what the headlines say. Thanks for watching.